Okay, this is Brent from TradeGuild.net, and it is Thursday, August 19th. So we had a pretty nasty day down today. We've been seeing some strange activity going on in the market, but as far as today's stats, what I like to look at is the price to volume relationship, whether it closed up with falling or rising volume or closed down with falling or rising volume. Each relationship has a particular meaning. Today we saw across the board a dominant close down with volume down, which really indicates panic selling at this point. At some points it could indicate capitulation, but we're too early into this, so it really indicates panic selling. Of some of the indexes, some of the averages, we had the Dow 30, we had 25 in that relationship, panic selling, and all 30 of the Dow closed down. The NASDAQ 100, we had 64 in that relationship, and 90 closed down. The Russell 2K, we had 1,342 in that relationship, and 1,846 of the Russell 2K closed down. The S&P 500, we had 308 that fell into that relationship of panic selling, and 481 of the S&P 500 stocks closed down today. So it was a pretty nasty day as far as breadth is concerned. I told you we've been seeing kind of a strange relationship the last several days this week, and I think into last week a little bit. And usually what happens is when we're going to get a bounce, we see accumulation first, a period of accumulation, and then we get a bounce, and then they sell into that. What's been occurring recently has been more on a day-to-day basis. So what we see over here is the 17th, and we see the 17th as prices move up. We see distribution into the highs, and then down here when we get towards the lows of the 18th in the morning, we see accumulation over here, and then again as price moves up into the highs, we see them distributing those shares. So that's what's been going on all week, and it's been interesting to watch. And I kind of at first said, well, it seems like the market's afraid to hold because of some news coming out. It could have been Israel attacking the Iranian nuclear sites, the jobs number this week, obviously. But for some reason, they've been doing this on a day-to-day basis instead of a one-time basis. So obviously, they're afraid to hold a large position for a number of days. And now we get into yesterday's sell-off. So here's yesterday. And like I told you, that pattern, we've been seeing distribution into the price highs. Here's the price highs. But not only did we see that, it went into a leading divergence, which we hadn't seen before, at least not this nasty. So we saw a big leading divergence, which was a tell, I think, on today's action. So today we see the fall. Now today, interestingly, we had kind of a double bottom form, and we saw some accumulation there at that double bottom. You can see the lows of 3C over here, and higher lows over here, higher lows over here, even though price is lower at that. So we're going to call that accumulation. We can take another look at that. So here we are looking at a 5-minute chart of today. We see those two price lows here and here, and we see what we would call an actual leading divergence into today. So tomorrow's options expiration, perhaps we're going to see a move here tomorrow. I know that last time I looked, the biggest open interest was at 110 and 112. I don't know if we get up that high, but obviously there was some accumulation today, so it looks like there is going to be a move up tomorrow. Now, getting into looking at the market in particular, we had this ascending wedge that broke down pretty bad over here on this day. Sorry about the marker there. And we had been forecasting a bounce since last Friday, and we got that bounce. It's been pretty weak. We've seen some resistance the two previous days to today. Actually Wednesday and Tuesday, we see resistance here. That's almost a tweezer top, and then we saw that fall today. Remember the leading distribution we saw yesterday. So we saw the fall today, some accumulation. I like to look at this on a 3-day chart. It kind of cleans things up for me a little bit. And then I look at it, here's our big break out of that ascending wedge. So I'm thinking maybe, we rally up into this area here, possibly up into the 110 area. After that, I think we're going to go straight down, and we're going to probably hold up for a little bit, retest these lows, and eventually I think we're going to break right through those lows and head lower. Our long-term view and our strategy at Wolf on Wall Street has been one of accumulating into the highs, and we've been trying to play these bounces as well, but we're accumulating short positions into strength, and we've been doing that for some time. So it's not too late to get involved. Wolf on Wall Street. There's lots of links at Trade Guild to tell you about that. If we take a look at USO, take a look at oil, the dollar's been going up, so we figured there's a correlation there, an inverse correlation. But with USO, there is some accumulation occurring. Watch this. If we look at 3C on a 15-minute chart, we're seeing positive accumulation. If I go ahead and jump to another 15-minute chart, we're seeing the same positive accumulation. And if I jump to my third 3C 15-minute chart, exactly the same thing. We're seeing some positive accumulation. So something's going on here in oil. I'm not ready to say that it's ready to blast off quite yet, but there are some things going on there. So we're watching things like DVO, UCO, and some different oil plays. As far as gold, let's take a look at GLD. I'm going to show you this a little bit closer. And again, we see this ascending wedge. I've kind of stayed away from gold. It broke down through this trend line. We see this ascending wedge. To me, this looks like it's sticking out there a lot with its neck out. It looks kind of like a goose with its neck out. It looks kind of fairly weak to me. A couple other things that are going on with that. As far as the daily 3C charts, there's distribution there. Here's another daily 3C chart. Look at the distribution in this one. That's in a leading divergence. And over here, again, we see distribution and pretty much a leading divergence. So I've stayed away from gold. I'm not quite sure what's going on there. So if I don't know what's going on, I stay away. As far as our short recommendation today, I told you guys I would give you one, and that was MSPD. And the reason why we chose MSPD is because we have a very nice top going on here in MSPD, and we had a breakdown through that neckline. That occurred on some heavier volume over here. And if we just zoom in real quick, we see that we got a bounce right up into resistance over here, and then we got this breakdown today. Now there is some accumulation in MSPD. If we look at a 1-minute chart, I'm going to get you there, and we see this positive accumulation, which is indicative of what we're seeing in the market as well. So I'm not sure how much I read into it, but any strength on MSPD I would short more. I think this is an excellent short. So that's it for tonight. Brent from TradeGuild.net. If you want more, you want the strategies, the tactics, the long list of shorts that we have, and the bounces that we're playing, take a look at Wolf on Wall Street. Like I said, there's links at TradeGuild.net for Wolf on Wall Street. It's a members only site. We don't have a lot of space left, but you're welcome to join us while there is. So thanks a lot for listening, and have a great trading week.